everyone, welcome back to my YouTube channel. Welcome back. Today we are now receiving more news coming out of the crypto market talking about crypto regulation. As of right now, we are seeing and begin to see more federal agency within the United States beginning to step up and to speak up against violation of federal law, especially dealing with crypto activity here. Just recently, the FDIC just hit FTX US with a cease and a desist order over their false and misleading statement. So right now, the FDIC just argued that any money that their client deposit into FTX US are not FDIC insured. So this is a very problematic thing. If the money you deposit into your crypto account, not considering about crypto asset, we are just saying US dollar. Any US dollar you deposit into your account and it's being held by a third party institution, which are bank. Bank are FDIC insured. But however, if you are going through the exchange by depositing your money into an FTX US crypto account, those assets are not protected, folks. And this is what we are seeing. We are going to continue to see more clarity from the Federal Reserve. The Federal Deposit Insurance Corporation just announced any of the money you deposit through the channel of a company such as FTX US, and that money is now being transferred to a nearby bank. And those money you are now deposited or had deposited is not protected under FDIC. And the FDIC just clarified this by ordering several institutions with a cease and a desist letter over their misleading claim here that all the money that they deposit into each corresponding account are FDIC insured, which they say, hey, that's not the case here. We have seen in the past, Voyager has been hit with a cease and a desist or letter. So this is just something we are begin to talk about. So right now, this is just a beginning, folks. Regulation are coming in, and the U.S. federal agency are now stepping up their regulation and provide more clarity within the crypto market because there are lack of coordination as of now. That is what we are seeing. So there were other crypto exchanges that were hit with a cease and a desist order over their misleading claim. And right now, the 5 companies say that, hey, any asset you deposit into an account are or may be FDIC insured. And the FDIC just clarified and re-clarified, hey, those assets are not insured by us. So right now, consumers need to be worried. Investors need to understand the phenomenon because the money you deposit into these crypto entities, crypto exchanges, are not protected under federal law. So if the company filed for bankruptcy, your money is lost, completely gone here. So the U.S. FDIC published 5 cease and desist order on Friday, including 1 to crypto exchange FTX US. So we have seen other victims. CryptoNews.com, CryptoSEC.com, SmartAsset.com, FDICCrypto.com website were also directed to seize these alleged misrepresentation. The FDIC say that these companies made false representation that suggested their product might be insured by the agency, but however, they are not, folks. The FDIC only cover for federally regulated bank account up to $250,000 per account here. So we have seen in the past, and I have covered about this. So FDIC did order Voyager Digital with a cease and desist letter over their false claim that the money they deposit into Voyager are FDIC, but they just re-clarify here. So the FDIC are now stepping up and provide more clarity within the crypto market. And this is just the beginning of regulation. More recently, United Texas Bank CEO want to limit the issuing of US dollar-backed stablecoin to bank. And right now we have seen that he claimed that stablecoin issuers like Circle were effectively sucking deposit out of the banking industry. So here we are seeing conflict between the digital era and between our digital financial infrastructure versus our traditional financial infrastructure. So he's saying that this is leaving stablecoin to bank rather than crypto firm. And he just speak this before the Texas work group on blockchain matter in Austin on Friday. And he suggests that, hey, we should limit the issuing of US dollar backed stablecoin to licensed bank rather than issuer like Circle. Right now, they are trying to provide more clarity and try to protect the integrity of the crypto market. We have seen in the past who buy stablecoin actually depeg even Lunati, depeg even USDT, depeg. So this might be a good transition by reallocating this fund from the crypto institution to the banking institution, which can hold the fund. So, and that it can be protected under the FDIC procedure. So right now, that's what he's saying. Stablecoin issuers should be held to the same standard as insured depositories institution, including state and federally chartered bank. So we are going to see stricter regulation with the crypto market, especially dealing with stablecoin. And they say here, this is what Beck say. He say if stablecoin are defined to be money, banks are the proper economic actor to issue and manage stablecoin. Banks have the expertise and legal framework for handling money, and unlike today's stablecoin actor, banks are highly regulated at both the state and federal level. This is really a great idea, and with regulation coming, we are going to continue to see more trust and integrity within the crypto market by reallocating and jurisdiction within each institution here. So a lot of stuff are coming out, and this is just not the beginning. Canadian bank even regulated, even detailing about crypto liquidity and backing rule. And right now they're trying to supervise the entity that engage with crypto. We have seen Canada now taking a lot of steps and precaution in order to protect investor right now. Here, the OSFI, the nation's primary bank and insurance company regulator, directed entity under supervision to limit how much exposure they have to cryptocurrency under interim guidance published Thursday. Strict regulatory coming, folks. This is just coming. So with the adoption of new regulation coming out from many participating countries, we are going to continue to see the adoption and the rise of the crypto market. That's just the beginning. Just the beginning. Let's look forward with United Kingdom. United Kingdom crypto industry just welcomed a new stablecoin rule. So right now, UK regulator even regulator new power over payment-focused crypto asset like stablecoin, but detail on how the rule might be interpreted by financial watchdog are pending. And we are seeing a lot of integration, a lot of welcoming from the bill. But however, crypto regulation are coming. This is the good part of regulation, folks. Our traditional financial infrastructure are regulated strictly, but despite the fact of our crypto market really not regulated to the full standard, and federal agencies from different countries are now taking really precautious steps into enacting federal law on these agencies. Last but not least, folks, EU lawmakers are planning to cap bank Bitcoin holding. What we are seeing this is to protect the international standard by legislating hefty capital requirement for lender now. So this might be a good thing because when we minimize the risk, there's less chance of the institution, the corresponding institution, to declare bankruptcy or even to file for bankruptcy. And they should be in a better position to well survive this wave. So right now, we are going to continue to see more regulation, and a lot of stuff are coming out with regulator, federal agency from different countries, especially talking here from the international community, are stepping up their oversight, folks. So if you really don't like oversight, just be prepared right now because oversight are coming within the crypto market, and this is just the beginning of regulation. Regulation are essential to us. This is how we are able to protect crypto investor and any investor overall. you enjoy watching my video, please click on that subscribe button and also don't forget to click on that like button. Thank you everyone. Have a nice day.